Hey everyone, I still remember covering Jio Financials in detail during its demerger from Reliance Industry. The idea behind the demerger was to leverage Reliance distribution network to capture market from one of India's biggest theme, that is financialization. Be it lending, asset management, brokerage, payment, insurance, and so on. And since every Reliance investor received Jio Financials share, today Jio Financials has more than 50 lakh shareholders. In fact, Jio shareholders are even more than Reliance Industries itself. Now, if you look at Jio Financials' journey since the demerger, it is already a roller coaster ride. Stock quickly delivered 80% return during the initial few months, but then it fell down around 50%. It did recover from the lows, but the stock is still down significantly from previous highs. So the first question is, how has been company's progress so far since the demerger? Then what are the opportunities and challenges for their business? And most important, is it worth considering Jio Financials at current levels? So in today's video, we'll decode the journey of Jio Financials so far and try to understand all important questions from investment point of view. Alright, let's get started. Let's start with each of the business verticals and the progress in each vertical. So the first vertical is lending. Here they offer various types of loans for retail and corporates. Now if you look at the progress, last year Q3 they had a loan AUM of 4,199 crore. Today the loan AUM is 19,000 crore, a massive growth in last 1 year. Even quarter on quarter it is up by 29%. If you look at the disbursement, it is also up more than 2 times in last 1 year and 30% quarter on quarter. And the borrowing cost is one of the lowest at 6.99%. Company's net interest income and profit growth is also very robust for this segment. So on the lending vertical, Jio Financial is growing at a fast rate. However, the key here is not just the growth. The key is quality of loan book. How efficient is the credit underwriting of Jio Financials? Because if Jio lend money to weak borrowers, they can default and the entire business can collapse. Hence, you can't simply look at the AUM growth in lending business. Of course, asset quality cannot be judged right now as it is too early. But eventually, we'll get a good idea on the risk management side of the business based on the provisions and the asset quality. So the key here is to keep a close eye on company's asset quality in coming quarters and years. Then second business vertical is investment. Here Jio has partnered with BlackRock, which is world's largest asset management company. So there's a 50-50 joint venture between Jio and BlackRock, and the entity is called Jio BlackRock AMC. Jio BlackRock has already launched 10 funds across cash, debt and equity within 6 months of launch. And its total AUM now stood at around 15,000 crore. So again, the investment category is also growing fast. Although it is also in very nascent stage at the moment, but it is also one of the most promising segment. Then third vertical is payment. This vertical focuses on enabling digital transaction for both consumers and merchants. So there are two categories within payment. First is Jio Payment Solution. It is a payment aggregator where it can process various digital payments like UPI, debit card, credit card, wallets, similar to Paytm. Then Jio also offers payment bank that offers digital saving account, UPI transactions, bill payment and so on. So if we take a simple use case, let's say a small Kirana store owner onboards Jio Payment Solution and start accepting payment via any UPI app or card using their QR or point of sale machine. Now all transactions get settled into the bank account, which is also with Jio Payment Bank. Over time, this payment data helps Jio Financials assess the cash flow and they can offer various loans, credits and insurance to that Kirana store owner via their Jio Finance app. So this creates an entire digital ecosystem for Jio Financials. This segment is also growing at fast rate. Although the base is very small today, but the total transaction volumes have grown multiple times from last year's same quarter period. And quarter-on-quarter growth is also very high. As a result, their fee and commission income has also jumped significantly. Then company's fourth vertical is insurance. Here Jio is currently offering distribution service for various insurance companies via their app. Basically, company is trying to leverage its network to earn from insurance distribution. In addition to this, Jio has also done a 50-50 joint venture with Alliance to build its own insurance capability. Currently, the regulatory approvals are in the process. Overall, if we combine all their businesses in latest Q3 results, Jio's total income has doubled as compared to Q3 FY25. But at the same time, its expenses have also grown big time due to various growth initiatives. As a result, its pre-provision operating profits and net profits are looking flat on quarter-on-quarter basis. And as compared to last quarter, it is showing significant fall due to dividend income and share of associates and joint venture that was received in Q2 FY26. Now let us try to understand the opportunities and challenges for Jio Financials in near future. So the biggest opportunity for Jio is their distribution network. Jio already has millions of users and merchants. So they don't need to build their user base from scratch, and this is very, very important. They can directly leverage their distribution across their 4 verticals: payment, lending, insurance, and investment. This is the reason company is expanding rapidly. Beyond their existing network, Jio is catering to financialization theme in India that itself has massive growth potential. What is important is that financialization theme is not cyclical. It is structural. Factors like rising income, formalization of job, then digitization, UPI payment, and regulatory updates, they are all pushing household into the formal financial system. As more people earn, save, borrow, and invest digitally, the addressable market for payments, lending, insurance, and investment would keep on expanding year on year. Jio Financials has positioned itself right at the center of the shift. Then another big opportunity is cross-selling. Once a user or merchant enter the ecosystem through, let's say, UPI or a saving account, then Jio can also offer higher value products. Could be a personal loan, then insurance, investment offers. Since customer acquisition cost is already paid upfront at the time of acquisition, the additional sales comes at zero cost, and it improves the unit economics for the company in the future. This is the same playbook that has worked globally in financial super apps, and India is still early in this journey. However, the journey for Jio Financials won't be smooth. The biggest challenge for the company is execution risk. Building financial service is very different from telecom or retail. Here, risk management, underwriting discipline, and compliance matter more than growth. Then second challenge is regulatory risk. Financial system is highly regulated. Payments, lending, insurance, AMC, they all have different regulators. Any misstep can slow the expansion or cap the returns. Then third challenge is competition. It is already very strong. Payment include Phone Pay, Google Pay, then lending include all the banks, NBFCs, fintech companies. Then investment already has more than 40 AMCs today. So margins are thin and customer acquisition is very expensive. But the final question here is it worth considering Jio Financials at current level? Alright, let's discuss it. See, first thing we need to understand is that when it comes to valuation, PE does not make sense for Jio Financials right now. PE works for mature businesses with steady profit. But in case of Jio Financials, all its verticals like payment, lending, insurance, asset management, they're all in growth stage. Plus, there's a massive investment going on to set up the business, and that has resulted in a very high cost for the company. On top of this, treasury income and other investments are distorting the numbers. So looking at PE and saying that it is expensive or cheap does not tell you the real story. A much better way to assess the valuation is looking at price to book. Jio is essentially a financial platform with a growing balance sheet. So price to book tells you how the market is valuing the capital it has deployed. At the moment, its price to book is quite comfortable. So if you're a long-term investor with 3 to 5 years and even more than that kind of horizon, and you believe in Jio's ecosystem, then India's financialization story, and that they can execute, then yes, it is worth looking at Jio Financial. But you have to be ready for volatility. Having said this, if you are a short-term player or someone who wants to see earning today, then it is better to avoid it. Overall, Jio Financials has massive growth opportunity with strong distribution power, but the outcome depends less on ambition and more on risk discipline and execution quality. This is not a one-year story. It is a 5 to 10-year compounding bet, and one would need a lot of patience to handle the volatility. Now you tell me in the comment, do you think Jio Financials can grow big, or is it not worth taking the risk? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.